Welcome to Looking at the Markets with David Modell. Double bottom pattern. This is one of my favorite stock chart patterns. It's not just for stocks, it's also for commodities, forex, cryptocurrencies, whatever it is that you're trading. It's powerful. It really is. And what it is when you have a stock or ETF or whatever, it goes down to a certain level, bounces right off of it, and then retests that level. And you can call this a support level if you want to, okay? It's a support level, meaning that the market is demonstrating not just once, but twice that it doesn't want to bring the price below that level. The more times it bounces off of a certain level, the stronger that support level is. And so when it bounces right off of it once, and then bounces right off of it again, that's even stronger for the support level. All right, and a triple bottom, that could be even more powerful. But we're just going to stick to double bottoms in this video. And this is from SPY, also known as the Spiders, okay? And that is an ETF by State Street that tracks the S&P 500. And so this is a pretty good proxy for the S&P 500. And we're in the middle of a double bottom pattern as I'm making this video. All right, we're right in the middle of a double bottom pattern. Here we are. Here's SPY, bounced right off of this 260, let's say 264 level. Okay, went down to around 264, bounced right off of it. So you can call that a support level. But if you're not sure whether it's a strong support level yet, guess what? It retested it, went back down to around the 264 level, and then bounced right off of it again today. Bounced right off of it. I mean, this is about as textbook as it gets. Bounced almost exactly to the tick off of that same level. All right? And this isn't the first time. Did it back here. Went down to, let's call this the 257 level, let's say. Bounced off of it, and then came right back down to it. Almost exactly the same level, around that same number, around 257 or so. And then it was like a springboard for the next few months, just up and up and up. That's powerful. That's the market showing not once but twice that it doesn't want to bring it below that level. So these are two textbook examples from the most popular ETF in the world, SPY, the Spiders. So we're in it right now, and that's why I'm bullish on this right now. Not necessarily. Could it go down again? It could. It could form a triple bottom, or it could just go straight down. There's no guarantee. None of these work 100% of the time, but it's a pattern that I've found to be pretty powerful oftentimes. Let's take another look, because those aren't the only two times that SPY, or the S&P 500 ETF, have formed double bottoms. Here's 2015, late 2015, bouncing twice off of approximately the same level. It's not an exact science, okay? You can't expect it to be mathematically down to the penny or down to the tick to be exactly the same level. Came right off of it, went down again, another double bottom here. You could even consider this whole thing a double bottom, although it's not exact. It's kind of slanted, all right? But as we can see, there's been a history of double bottom patterns. What's going on there? That's the market going down, shaking out all the beginners, okay? Because people who are beginners in the stock market, when they buy, they usually buy high. And then it goes down, they sell low, and they lose. The market will do that. It will shake you out. And it'll frustrate you if you're a beginner, because it'll go down, and then head fake up, and then go down again. And a lot of beginners will just give up here. They'll say, you know what, this whole stock trading thing is not for me. And they sell here when all they had to do was recognize the pattern and say, oh, that's a double bottom right there. Good chance it's going to come back up. And if you held on, you would have gotten your money back. Even if you bought at a high price, you would have gotten your money back just fine. Okay? Let's get another example. This is EWZ, the iShares Brazil ETF. Okay? textbook double bottom pattern. Came down to the same level around 31. And you can see this is a long-term double bottom pattern. All right. Yes, I've seen them in day trading. That's fine. They can work there as well. I've seen them in swing trading, and I've seen them in long-term position trading. This is a longer-term one. It took a long time to form this double bottom pattern. This is for patient long-term investors, but it worked great. Textbook right here in the Brazil ETF here during the summer and fall of 2018. I hope you're better able to recognize the double bottom pattern. Perhaps I'll make a video on triple bottom patterns. Maybe I'll do that. I don't know. Let me know in the comments. What do you want to see? Is this helpful to you? Have you used this pattern on your own with success? Tell me all about it. Give this video a thumbs up if you like it, and subscribe to my YouTube channel if you haven't done that already. That way you can receive the latest updates on my financial educational videos. And I do coach people in trading and investing, chart patterns, things like that. So you can email me anytime. My name is David Modell. My email address is davidmodell@gmail.com. Thank you so much for watching and listening. I'll talk to you again soon.